Good morning, traders. This is an update on my swing trade with Spxl. If you're not familiar, that is a 3 times leveraged ETF that follows the S&P 500. So if the S&P goes up 1%, this goes up 3. Likewise, if the S&P goes down 1%, this goes down 3. So I've been trading at least Spxl. I've been trading other S&P 500 ETFs for the entire year. But with Spxl, I've been trading since May, just strictly using Webull back here, actually. That was the first trade that we entered, and I've been using the 50 MA to follow the trend, and once the price comes down and hits the 50 MA, that is the end of the trade, and it's the end of the trend as far as I'm concerned. And oftentimes the price comes down and bounces off the 50 MA, but it doesn't always, and we're going to see a perfect example of that today. And that's why I don't just add when the price comes down to the 50 MA. I stop the trade, I wait for confirmation of a reversal from the 50 MA, and then I can get back in the trade. So this was trade number 1, trade number 2, and I should say that's the end of trade number 1, and then the beginning of trade number 2, the end of trade number 2, the beginning of trade number 3, and then we added to trade number 3 over here, and trade number 3 ended right here. So this one was the best trade of all 3, but they've all been profitable so far. I did take one more trade after that, and I'll show you that right now. And that one did stop me out yesterday for a small loss. We only gave back 12% of our total winnings for since May with Spxl. So it was a calculated risk, and I'll show you exactly what happened with that trade. So first of all, that previous trade ended right there. And when that happened, the price gapped down here on this daily candle. And then as soon as the next daily candle makes a new high, I took an entry and I calculated my share size based on the size of this candle and the amount that I was willing to give back if the trade failed. It's always important to consider the worst case scenario, getting stopped out of your trade for your full loss, and figure out whether or not that's acceptable to you. If it's not acceptable to you, reduce your position size. If the smallest position size that you can take is not an acceptable loss, then do not take the trade. It's as simple as that. So I set my position size based on the risk provided by this candle. So it only ended up being 2 shares because this candle was very large. So otherwise I would have given back a lot more than 12% of my total winnings so far. So let's take a look at what happened. So I got into this trade as soon as this daily candle broke above this one here, and my stop loss was just below this candle, and you could see it looked like the trade was going to work out there for a while. The price did come up to the 50 MA. I did not move my stop up because the candles were not fully above the 50 MA. I just kept it over here because I figured as it's trading around that 50 MA, it's going to be very choppy, and I would just get stopped out even if this thing ended up taking off. But that didn't happen. Came down, flushed down, and I got stopped out yesterday on this candle right here at the very end of the day. And it wouldn't have mattered if I would have made my stop loss a little bit wider. I would have gotten stopped out today because it's continuing down lower. So at this point, I'm considering this ETF and the S&P 500 to be at least a short-term downtrend. And I need to see confirmation of a reversal and a change in trend before I get into the next trade. So I'm not going to tell you exactly what my next trade will be because I do not want people to follow me into trades no matter what. But I can tell you that I'm not going to get in on the next daily candle that makes a new high because that's not enough confirmation that the trend has changed, even though that may work. This could have worked out. It didn't. It stopped me out. The next daily candle that makes a new high might be the one, where this thing reverses and takes off, but I would consider that an extremely risky trade and would not recommend taking that entry. I'm not going to be taking it, and the entry I will take will be at probably a higher price than that, but there'll be more confirmation that the reversal has happened and that the trend is going to continue in the upward direction. So that's where we're at here with the Spxl swing trade. I do have a strict plan that I follow for these trades, and it is available if you're interested on patreon.com/tradingarmor. And I have my mid-cap market open day trading plan there as well, a binary options trading plan, different trading calculators, a lot of interesting stuff. The spreadsheets are there. In fact, let's take a look at my spreadsheet right now and see how we're doing on these Spxl swing trades. So as I said, my first trade was in May 20th, And you could see the trades were fairly small. The first one was kind of a random entry because, and what I mean by that is as far as risk goes, because I didn't have anything to base it off of. It was the very first trade with Spxl and with Webull. So anyway, that one was the one that kind of set the tone. And on that one, we made about $20. So based off of that reward, I didn't want to risk the entire amount on the next trade. So I risked a little bit more than 12% on that one, but that's where I want to be, about 10 to 12%, trying to mimic a 2-to-1 reward to risk ratio with swing trading. So it's a little bit tricky. It's a little different it's actually very different than what I do with the day trading, but that's kind of the idea. So the next trade made about the same amount, and then the following trade made almost 1.5 times the amount of our, so because it's the sum of these 3 entries, because again, I had originally 3 shares, and then I added one, and then I added another one. So the sum of these 3 is the third trade. And then this is the last trade that I was in that I just said I got stopped out on yesterday. So that loss was about $12. And so overall, we're up over 11%. We're up over $60. And the average amount that we're trading with is under $500. So I think that's, even though, that's not a big number, it's not anything to get too excited about. SPXL and ETFs in general are going to be slower movers. The reward is not going to be quite as great as, say, like a small cap stock or something like that, but it's going to be a lot less risky. And the idea really here is just to kind of beat the banks, beat the savings accounts and CDs and stuff like that, because this is a much more, I guess, rewarding vehicle than obviously something in the bank, but also riskier because you can't lose money, at least theoretically. You're not losing money in the bank. You are if you compare it to inflation, but you're not getting money taken out of your account. So that's where we are. I'm happy with the results so far, and I'm just going to keep trading this plan. And as I said, I'm not going to get back in until I see confirmation of a trend change. So let me know if you have any questions about these trades or swing trading, the spreadsheet, my plan. All that stuff is available on patreon.com/tradingarmor. But as always, no matter whether you're swing trading, day trading, options trading, binary options trading, you need to go into every single trade with a plan, and you must stick to that plan 100% of the time. Otherwise, what you're doing is gambling, and your results are meaningless. So definitely have a plan, some sort of plan, stick to it, and repeat it every single day. And then always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.